Welcome back to DC Wealthbuilders, where we break down the strategies, systems, and moves that build your wealth. And today, we're going to actually unpack one of the big questions that I hear a lot. How much does it actually cost? How much cash do I really need to buy my first or next investment property in Washington, D.C.? How much do I really need to get started? So we're going to unpack that today. Yes, we know that DC is known for being very expensive, but what most people don't realize is that there's a real entry point for first-time investors if you understand the strategy and the numbers. So today, we're gonna break it down. The types of investment properties that you can buy in Washington, D.C., how much cash you would need up front to make that investment, and if you don't have $100,000 sitting in the bank, what could you do? So let's jump in. First question, right? What are we counting? What do we say when we say investment property? What do we really mean? So let's define that. In DC, this could be a single family row home that you rent out. It could be a 2 to 4 unit multifamily property. Think a basement apartment, something with a duplex that has 4 units. It could be a condo that's used for long-term or short-term rental income. Talk about the Airbnb and some of those laws. It could also be a house hack where you actually live in one part of the property and rent out the other. That is still the first step. It does not have to be a 10-unit apartment building, which is a lot of times the part that people feel like if I'm not ready to go at that level, I just shouldn't start. Most wealth building portfolios start with one smart move, and that's often the small, manageable property in a strategic neighborhood. And that one investment helps be the catalyst for additional ones. All right, so let's unpack some of the typical purchase prices in Washington, D.C. What do these investment properties look? We're gonna break it down and look at a couple of neighborhoods. So a 1-bedroom condo, rental ready, Northwest, $350 to $450, that's likely gonna be your range. You can think about a 2-unit property, Petworth, Brooklyn, that's gonna run you somewhere between $650 and $900, depending on the condition. If you're thinking more of a fixer-upper, think Deanwood, Fort DuPont, Riggs Park, that might be the entry of $350 to $500. These numbers can obviously vary and they drop significantly if you step outside of the district or condition changes off market, the needs of the sellers, which we'll talk a little bit more about, right? What does the seller actually need? So remember, like DC, pricing reflects location, it reflects long-term appreciation potential. It's not just what you pay, but it's what the market can give you back over time. And the market, this isn't a time to play overly optimistic. We are actually trying to play here of like, what's the worst case scenario? What happens if the renovation costs are more? What happens if I can't identify a tenant right away? What if I do and then the tenant has to transition out, right? These are all things that we're thinking about when you look at the property and we think about the considerations of whether or not that property is the right thing for your next investment. All right, so let's unpack how much cash you need to get started. Option 1, right, house hacking. This is where you're owner occupying. So you're gonna have an owner occupant loan. You're gonna live in the whole house or live in one unit and rent out the other. This allows you to qualify for a lower down payment product option. Think of like an FHA product. There you've got a down payment of 3.5%. So on a $600,000 property, $21,000, probably got another $12,000 in closing cost. So you need about $30,000 to $40,000 in cash to make that purchase. So the benefit of that is you've got lower entry cost, you have the best likely loan terms, you can live in the asset while it's growing in value, while it's appreciating, and you've got additional income coming in to offset those costs. The challenge, right, you've got to live in the property, you're gonna be ready to live in the property. You're limited to one FHA loan at a time. And so that can sometimes be a limitation, right, of being able, you can only do that for your first investment. And then you have to think about alternative ways to finance the next. So let's unpack that for option number 2. All right, option number 2, let's look at an investor-only financing option. This is non-owner occupant loan. So if you know from day one you are planning to rent out the property, right, you are gonna look at a product like this. It's gonna require a higher down payment. That down payment is likely gonna be between 15 to 25% of your purchase price. So on a $600,000 property at 20%, you're gonna need $120,000. Plus your closing cost, $10,000 to $20,000. So all in, you're gonna need about $130,000 to $150,000. That has no residency requirements. You do not have to live in the property. It's the fastest path to scaling for multiple properties. Some of the challenges, right? Your interest rates are gonna be higher, certainly than an owner-occupant product. It's gonna require, right? It's gonna tie up more of your cash. And the lending standards are going to be higher. What your debt to income ratios are, what your credit score is, all of those things are going to be able to factor in, but this is going to be a loan product that's going to let you be able to say, hey, I can start to jump in. And remember, even that 120, you're making a full investment. So you're getting the benefit of that full $600,000 with your 130 to 150 in cash that's going to go in to get started on that. All right, let's unpack option number 3, partnerships or private money. So what happens? You don't have the 150 in the bank, but you're still ready to dive in. You can bring the heart and the hustle, and somebody else brings the capital. So think about partnering with somebody else, right? Maybe another investor or a family member, somebody that has cash, but doesn't have all the time to run around and look for the property. You can also think about hard money options, right? Hard money lending options that are gonna have even higher rates, but are really designed to help people who aren't gonna necessarily qualify for that traditional one. That's gonna require cash, but less of it. One of the biggest things that you're bringing in that model is your sweat equity or co-managing of the asset. So this is accessing the money by saying, hey, I've got the opportunity, and you're not having to go at it alone. So that can be a good product or a good option if you're saying, hey, I've got access to these really interesting properties and I don't have all the cash. Finding people, I often tell a lot of our investors, right? Money finds good deals. So if you've got a good opportunity, the challenge likely isn't gonna be finding the person that wants to do it. It's gonna be, hey, what are the terms? What participation can I have to be able to really be an equity participant in a deal if you don't have all the cash, but you have access to the property, you have access to the management of it, and being able to get that property from its original state to being rented or ready for the market if you're gonna buy and renovate and resell. All right, next up, thinking about your renovations and your reserves. Here's where new investors get burned. They underestimate what it takes to operate the property and fund that before you actually get it back into service, right? So after you buy it, but before it's ready to be rented or back on the market, what are all those costs? A general cosmetic refresh, usually easily $25,000 to $40,000. A full rehab in Washington, D.C., anywhere from $100,000 to $500,000, depending on the size of the property, the square footage, the extent of that renovation. Are you adding an addition? Are you going up or beyond, right? Those are really significant repairs. Remember, in DC, you've got older homes, 100 plus. So these are not small renovations. When you're getting a property ready to go back into service, you wanna make sure that your budget matches the work that needs to be done. So you really wanna make sure if you're putting a property up for rent that you've got 6 months of reserves, you've got $5,000 to $10,000 for emergency repairs, the things that we don't expect. Right now you've got heavy snow, ice, all these things that actually can really impact the roof, impact the things, the systems that maybe aren't ready for these extreme conditions that we're experiencing. So you're buying the systems and the timeline that really are gonna be required to make that property work for you. So what are some of the smart places to start? Here are a few of what I think of as like starter-friendly neighborhoods, areas where first-time investors are still finding incredible opportunities. And these are places that you might wanna dig into and learn more about, right? Deanwood and Marshall Heights, lower price points, consistent rental demand, and so that can be a good place to start. Next up, we have Riggs Park and Fort Totten. You've got metro accessibility, poised for growth, lots of development happening around that area, so those are also really interesting to look at. Hillcrest, huge lots, often two income potential, right? Multiple units, quiet community vibes, also lots of incredible development and retail coming in. If you're looking for your fixer-upper strategy, take a look at Petworth and Brightwood. You might have higher buy-in, but excellent resale and appreciation upside. Also, your product type, right, row homes, can make your renovation cost a little bit more manageable. My pro tip, get out, walk the streets, look for boarded up homes, talk to neighbors. Neighbors know everything, right? This is where real investors find deals. They're not just sitting behind the computer, they are getting out into the neighborhoods, they're walking them, they're getting to know them, they're seeing what restaurants are coming in, what's happening in an area, and that is gonna help you identify deals and get really familiar with the neighborhoods where you're gonna deploy your investment strategy. So you have to know, right? You've got a strategy, you've got a plan, you know the areas, you've built a strong team, and you have a deep understanding of how the DC market works, right? Become a student of the market. And if you're using right loan products and tools, the right entry point, and the right neighborhoods for you, you can start investing with as little as $35,000 to $50,000 out of pocket, or even less, right? If you've got a strong partner and you're showing up ready to bring the heart and the hustle. So the goal is not to buy cheap, it's to buy smart. And a city where real estate is one of the most powerful paths to long-term wealth, this is where it can all get started for you. So if you're ready to dive in with us even more, subscribe to our DC Wealth Builders. We have weekly episodes of local investing strategies, neighborhood spotlights, and real deal breakdowns, all designed to help you build your wealth right here in the district. Look forward to seeing you next week on Wealth Builders.